Chapter 13. Drawdowns, Repayments, and Loan Lifecycle Events. Once a facility is approved and set up, the borrower can begin utilizing it by requesting drawdowns. The drawdown and repayment process is the operational heart of corporate lending, involving continuous transactions that must be accurately recorded, tracked, and reconciled. Section 1. Drawdown Requests. A drawdown is a request by the borrower to access funds from an approved facility. The borrower submits a drawdown request specifying the amount, the value date or date on which funds should be disbursed, the currency if the facility is multi-currency, and the purpose of the drawdown if required by the facility agreement. The bank must verify that the drawdown request complies with the facility terms. This includes checking that the requested amount does not exceed the available facility limit, that all conditions precedent have been satisfied, that the value date is within the facility tenor, and that the borrower is not in default or breach of covenants. Section 2. Disbursement. Once the drawdown request is approved, the bank disburses the funds to the borrower's account or to a third party as instructed. The disbursement must be recorded in the loan management system, updating the facility utilization, the outstanding principal balance, and the borrower's exposure. For term loans, the disbursement typically occurs in a single tranche. For revolving facilities, the borrower may draw down and repay multiple times throughout the facility tenor. Section 3. Repayment Schedules. Repayment schedules define when and how the borrower must repay the principal. There are several common repayment structures. Bullet repayment means the entire principal is repaid in a single payment at maturity. Amortizing repayment means the principal is repaid in equal or unequal installments over the loan tenor. Balloon repayment means small periodic payments are made during the loan term, with a large final payment at maturity. The loan management system must support all repayment structures and automatically generate repayment schedules based on the facility terms. Section 4. Interest calculation and accrual. Interest is the cost of borrowing and is typically calculated based on the outstanding principal balance, the interest rate, and the day count convention. Common day count conventions include actual over 360, actual over 365, and 30 over 360. Interest accrues daily and is typically charged at the end of each interest period, which may be monthly, quarterly, or at other intervals specified in the facility agreement. The system must automatically calculate and accrue interest, ensuring accuracy and compliance with the agreed terms. Section 5. Fees and Charges. In addition to interest, corporate facilities often involve various fees. Commitment fees are charged on the undrawn portion of a facility. Arrangement fees are one-time fees charged for setting up the facility. Agency fees are charged by the agent bank in syndicated loans. Prepayment fees may be charged if the borrower repays the loan early. The system must track and calculate all fees, ensuring they are charged in accordance with the facility agreement. Section 6. Prepayments and early repayment. Borrowers may choose to repay a loan before its scheduled maturity. This is known as prepayment or early repayment. The facility agreement may allow prepayment without penalty, require advance notice, or impose prepayment fees to compensate the bank for lost interest income. The system must support prepayment processing, recalculating the outstanding balance, adjusting future repayment schedules, and applying any prepayment fees. Section 7. Defaults and remedial actions. If a borrower fails to make a scheduled repayment, the facility is in default. The bank must take remedial actions, which may include sending default notices, accelerating the loan, making the entire outstanding balance immediately due, enforcing collateral by seizing and selling pledged assets, or initiating legal proceedings. The system must automatically detect missed payments, trigger alerts, and support the remedial action workflow. This concludes Chapter 13, Drawdowns, Repayments, and Loan Lifecycle Events.